Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, I want to discuss a few stocks that I'm ready to invest in that I feel with the drop are trading at a good value. They do come with their risks, but I do believe that they will go from red to green. So stand by because you're going to want to watch this video. So whenever there's a correction, whether it be from fear of bond yields increasing or inflation or whatever it is, tech stocks usually take the first hit. Usually they take the biggest hits. So Facebook pulled back a bit. It dropped down to 343, and it's a price that I want to increase my position in. I do have a position in Facebook already, but I want to buy some more shares while they're dropping here. If it drops more, I'm willing to take more, but I'm comfortable taking some at this position. So for my evaluation of Facebook, I have a fair market share value of $417.90. It's currently at 343. At this price point, I'm willing to increase in shares. And if it drops more, I'm willing to increase more. The next company that I want to add to my position is Lazy Boy. It's recently had a drop. I know this is a little unusual. There's not a lot of people talking about this stock, but I do like the company. I do think it's undervalued right now. I think the company has proven that they can be profitable. They've done so constantly for the last decade. Their balance sheet is well managed with cash on hand close to outweighing total debts. Based off of my free cash flow DCF, they are undervalued. So with the drop to $33, I have a DCF fair value share of $40.80. So a 22% potential profit. I will add to my position, small position. And if it drops more, I'm willing to take some more, but I think it's trading at a good price right now. Lazy Boy's profit margin has increased 2% in the last year from 4% to 6%. I like the company. I think they've been profitable. My price target is $40. And once it reaches that price target, I will reevaluate and see if I'm going to add to my position or close my position. The next company is very, very risky. And I sent a post when it was trading at 19 that I felt it was undervalued at that price. Since then, it's dropped quite a lot. It's dropped down to 14. I never did a video on it, but I think at this price, I am going to add to my position and I'm going to buy some at this price. I think it's too good to pass up, but it does come with very, very high risk. So one of the reasons that this company dropped so much is because the stricter Chinese steel production cuts has affected this company. And another reason is that the price of iron ore has dropped drastically. So with this fear of China not needing this company as much with stricter policies that they have, the drop in iron ore, that's caused an overreaction. And in my opinion, I believe it was an overreaction. I don't think that China will significantly reduce steel production at this time. So I feel, in my opinion, this is a high risk, but I still think that VALE has a lot of upside, even with China's effort to reduce steel production. So on Monday, I will add this to my portfolio. This is very risky, but I think it's just too good to pass up on trading at 14. If you look at historically, you know, there's some support at 1363, but even without the technical analysis, this company is profitable. This company has good free cash flow, and my DCF for this company gives it a value at 2261. And that's a 59% potential upside from 1420. And that's that I was very conservative with the revenue growth. I actually put no revenue growth for the next 2 years. I put a discount rate of 13%. So I put some conservative figures, and I came up with 2261. So I'm going to hold this. I'm going to add to my position on this. I do already have a position, and I'm just going to add some on Monday. So this is another stock that I'll be adding to my portfolio. The next company, staying along the theme of controversial, high risky Chinese stocks, I'm going with BABA at this time. It's dropped quite a bit. I've seen it drop for a long time. And just at this price at 144, I think it's too good to pass up. I'm going to have to add some to my portfolio Monday. I did do a DCF on this company, and I have this company based off of a free cash flow evaluation trading at 296. It's currently at 144. So that's 100% potential upside. So my goal is Monday to add increase to my position in this stock and just hold it. Once things get back to normal in China, once there's signs of the government not interfering as much with these companies, I think these companies will go back to their normal valuations. Right now, there's just a lot of risk with China government, but I'm taking a small position, and it's a risk that I'm willing to take. So I'm bullish on this company. I think at 144, this price is extremely low, and it's too hard to pass up, in my opinion. But if you're not into stocks that come with high risk due to macro, I would stay away from this. But for me, I'm taking a small position. Another company that I'm actually adding to my portfolio, I don't have a position in this, is Tencent. I've liked this company for a while. They're basically in every aspect of online businesses in China, with their core being built around video gaming and social networking. This is a company I like. Again, this goes with the high risk macro issues going on in China. But for me, it's worth the risk. I'm comfortable taking a small position. I have no position in this company. but I will be adding some on Monday. So it's currently trading at $58. I'm bullish on it. I gave it a evaluation of around $66. So between the free cash flow DCF and this DCF here, $75, the average right in between that is about 66. That's my evaluation of it. I think this company, once it gets over the macro issues with China, this should be trading back towards those prices. So going through my valuation, again, I was extremely conservative with my numbers and revenue growth and all those issues since there's so much going on in China. But that was my DCF for TCEHY, Tencent. And a couple other DCFs that I did, but I'm not going to jump in a position until I do more research. I looked at Big Lots, EA Sports, MU, those three other companies. Based off the valuation for Big Lots, it seems undervalued, but I'm just not too sure how well their online sales are doing. How many stores are they opening? So it does deserve more due diligence. MU, Micron, I felt like there was some potential, but I'm not bullish on it at this point. I initially did do an evaluation on it, and it seemed undervalued, but I'm not going to take a position on MU. And I do have a few shares, and I'm probably going to close my MU position after just looking at some numbers and thinking it was still undervalued. I'm changing my mind with MU and closing my position on MU. And it's an older position I had. I never made a video about it. And EA Sports, initially it seemed undervalued. For me, in my opinion, EA Sports, there's not enough upside. I think I want to wait to see if it drops a little bit more before I start a position. So those are the three companies that I started to do some research. Like I said, MU, I'm going to close my position. Big Lots I'm going to do more due diligence on Big Lots. And EA Sports, I'm probably just going to wait till it drops to decide if I'm going to take a position on EA Sports. So that was my video. Thank you for watching. Please subscribe, comment, and like, and see you on the next video.